Y continuamos de nuevo sobre el parqué de la Bolsa de Nueva York para tomar el pulso a cómo lo están haciendo los mercados en estas primeras semanas de 2011 y también intentar dilucidar qué es lo que podría ocurrir el resto del año. Para eso nos encontramos con Alan Valdes de Kabrick Capital, que es nuestro analista de cabecera, el que nos va a dar todos los consejos para saber dónde tenemos que invertir durante 2011. Thank you, Alan, for being with us.
Thanks for having me.
So first of all, how do you look at, what's your outlook for the U.S. economy? The inflation, unemployment?
Well, you know, I think unemployment is probably going to stay basically in this level, 9.3 to maybe 9.8, in that range. I don't see it really getting much better. It's going to stay elevated probably for the next 2 or 3 years. Inflation, I'm afraid, could be a problem. We saw South Korea today had problems. You saw China tighten a little, especially in inflation with commodities. I mean, we're seeing oil, which was at $80 a couple months ago, now $90 consistently. We're seeing corn yesterday at an all-time high, cotton trading higher now than it was during the Civil War. So we're seeing that important sector, those commodities, those food prices, and I think we're going to see that continue throughout the year. I don't think inflation, I think inflation is the secret weapon here that no one's talking about that really could derail a lot of economies around the world.
And do you think that that's the time for the Fed to start thinking about raising interest rates?
And I think it is, but unfortunately, see, the Fed's got a big problem. Like I mentioned, unemployment's probably going to stay high. So if you raise interest rates, housing, which is really in a depression right now, it's just going to get worse. I mean, foreclosures are at an all-time high. The housing market has not really budged at all in the last 2 years. If anything, it's maybe flat to a little worse. You raise interest rates, now you have a bigger problem. So the Feds are really stuck in a quagmire. What do they do? At the same time, like we mentioned, I really think inflation is going to raise its ugly head, not only here, but around the world. And you have to see these countries react to it. So it's going to be very interesting to see how they react. QE2 is not the answer, unfortunately. So it's going to be very interesting to see this play out. As a result, though, you know, it's funny. Sometimes what's good for business doesn't translate to good to the American economy. So I think business said is going to have a pretty good year, though, because I think the emerging markets, that's why I like stocks or equities that are in the emerging markets, that have footprints in these countries, in these nations. I think you'll see them do well.
And also, there's been a lot of business about U.S. debt, U.S. deficits, AAA. How do you see the U.S. losing its AAA at some point in this year?
I don't know about this year, but it's always possible. We do have a big debt problem. There's no question about it. A lot's going to weigh on the municipalities, on the cities, and on the states to see how they react this coming year. We're not out of the woods yet. I think we still have problems up here. Could we lose it? It's possible, because especially the rating agencies are under attack for being so slow with the past crisis that they're going to preempt a lot of things, and they may overreact. So you could see that happen. I don't think it's going to happen this year, but I think you really have to watch the U.S. They have a debt problem just like Europe, and it's not going to go away by these bailouts. So they have to really be proactive. It's going to be interesting to see it play out. It could become a problem. I don't think we're out of the woods yet.
And what about, you mentioned the muni bonds. Are we going to see a real collapse there, as Meredith Whitney said, or it's going to be more contained in some way?
I think it'll probably be more contained. I mean, I think you'll see a lot of them maybe not go the Meredith Whitney, which you mentioned, really doomsday scenario, but I think it's going to be tough. I think you'll see a lot of layoffs. I think you'll see a lot of municipalities merge. I don't think it'll be as bad as she says, but it has the potential to get worse, but not quite as bad as she said. I think it's going to be a problem, but not to the extent where it derail the whole economy. I don't think it'll get that bad.
And are you bullish or bearish towards 2011 here in the stock market?
Well, again, I think what's good for American business isn't necessarily good for the American economy. 50% of our earning growth comes from overseas, from Asia, from India, from Latin America. So I think that'll continue. I think the emerging markets will continue to do well. Therefore, any American company that has a good footprint in these nations will continue to do well. Remember, last year we say American business didn't hire. Fact is, American business hired 2 million people, but they were in Asia, they were in India and China. So I think that growth will continue. By 2015, there'll be 1 million new middle-class consumers, all in China and Asia. So American companies are setting up for this growth period, but it's not going to translate here to America. I think the problem with America is jobs, and I don't know where those jobs are going to come from, and that's the linchpin in this whole so-called recovery.
And which sectors are going to create benefits for investors? Which are the sectors to be looking at right now?
Well, I think we saw today with JP Morgan, I think the banks are going to have a good year. I mean, they've built up their balance sheets. We know no one's going to let them fail. Mortgages are getting down, credit card debt's getting down. So I think those banks that have been undervalued so long are a good thing to look at. I love the multinationals that pay a good dividend. Remember, if you have a checking account or a bank account, even a money market, you're getting zero. You go into some of these dividend-paying stocks at 6%, at 4%, that's free money. And I think I would definitely recommend a high-yield stock and with a good footprint in Asia, in India, in Latin America. I think that's the way to go.
And just a last question, how do you feel about the tech sector, especially with all these startups going public or at least in the private market getting like these valuations that are some kind crazy? Do you see a bubble there?
Yeah, it kind of reminds me of the dot-com bubble, actually. I'd be careful of those startups especially. A lot of them, their history isn't there. They have no track record. The tech's a little ahead of itself. I could see a little pullback, but you bring up a good point. Those startups, they get me a little scared. I'm not participating in them.
Thank you very much, Alan, for your time.